essentially the business itself, I think, is pretty low margin. I think they've been lucky with the weak yen. Operating margins, I think, close to 5%. But I think if the yen strengthens from here, they're going to have problems.
Right.
There's an awful lot of competition in the space. I mean, frankly, this is not the kind of business we think Japan is going to be good at going forward. This kind of production of commoditized product, whether it be TVs, whether it be LCD screens. Anything in the essentially in the consumer electronics segment, we think, Japan, the labour costs are just too high.
But aren't they doing a lot better, though? I mean, from the depths of the dungeon, a lot of TV makers are looking at a pretty bright, prospective sort of environment for 2014. Panasonic, the old Matsushita, and others were guiding up at the end of last year. It's almost like there's light at the end of the tunnel.
I think you could make that view. I mean, looking for essentially a bounce off the bottom, as it were. I think in terms of the three majors in Japan, I would say Sharp was probably the one that was probably best positioned, primarily because restructuring is complete. When it comes to Panasonic, restructuring still has a long way to go, and there's going to be costs associated with that. And Sony is in a little bit of a mess.
Okay. Mark, say hi to Sue.
Hello, Sue.
Hi, Mark. I guess we were looking at a glut of sell orders this morning. In fact, that the stock was untraded for a while this morning. Are you surprised that anyone would have bought into this stock at all? It priced at the bottom end of its price range, sure, but this is a cast off of, of Toshiba, Sony, Hitachi, and, loss-making businesses. So did it surprise you that anyone would have bought in at all?
Well, I think from a top-down basis, as I was saying to DeBernie just then, consumer electronics in Japan is just not a buy. And therefore, even coming in, I believe the share price was 900 yen per share. It was just looking too expensive right from the get-go. So you kind of couple that with essentially an industry which, certainly within Japan, we think is in structural decline. Why would you buy?
Okay. Finally, Mark, you had a bang-up year last year with your Japan Opportunities Fund. You were up 25%. You did very, very well. That wasn't like Ryan and E.T. up on the Nikkei, but you are active fund managers looking for durability, not just one-off gains. This year, is it going to be a lot tougher? The retailers will really burn, down 10% January alone.
I think this year looks like being very, very tough indeed. I think the drivers of 2013 were essentially almost, well, it's not so much Abenomics, but more Kurodanomics. So it's essentially the yen weakening out from mid-70s into less than 100.
Right.
Whether or not that can continue this year, I think, depends an awful lot on whether or not Mr. Kuroda comes in again and surprises the market, in which case he might move the yen again. The third arrow, we think without that, you're going to have a lack of what I would call long-term investors in the market, so it remains a spec and it remains a trade on the FX cross.